In today's episode of the Modern Wealth Podcast, we're going to go through some of Jay's top stocks that he's looking at right now, the market outlook for 2024, and exactly what it takes for you to be a solid trader. If that interests you, watch more. Welcome to the Modern Wealth Podcast, where we aim to empower, enrich, and evolve your lives. We always have absolutely amazing guests who will empower you with strategies, with techniques, with their mindset and how they achieve incredible success in their lives. And today, we have a very, very good friend of mine, Jay, who will be sharing with you all many trade secrets of his, including how he got his hair to be so nice and good, right? So for those of you all who don't know Jay, Jay is incredibly good, stock trader, right? He's fantastic. He has so many different side hustles. He makes his money through stocks, crypto, properties, so many different things. And today I really cannot wait to pick his brain to find out what he feels about the markets in 2024, where he sees opportunities, what are his current holdings, all this stuff and more, right? So if you're very interested to find out more about his insights and secrets, stay tuned to this podcast. Let's go. So Jay.
Yes.
Thank you for coming on the show, bro.
It's great to be here.
I really appreciate you, bro, right? Guys, I just want to share with you something. Jay is somebody I've been following for many years. I don't think he followed me, but I followed him.
Your bodybuilding journey.
my body journey, your hair journey, bro. Right? So I've been following him for many years. And, in Singapore, there are many different educators who share about investing and stuff. But he is one of my favorites, right? He's one of my guys who I really like. And the reason why is because he shares and teaches from his heart. He gives and he gives even more, right? He's a very established, renowned speaker. He's always invited on circuits, many different platforms and everything. And why? Because he gives and he shares so much with his audience, right? So, I really truly appreciate him for that. And, myself, I signed up for his program, I signed up for his, courses to learn more myself, because I always believe in learning, right? So he's my, my teacher as well, right? So very important. So today, he's gonna just be sharing a little bit about his journey, his steps of how he actually achieved his success, and essentially, hopefully, you guys can learn more as well, right? So Jay, sorry, I keep interrupting you, bro, but come tell me, bro. So tell us, for the audience who don't know you, tell us a little bit more about what you do, what you run, and yeah.
This is the most stressful question. I'm like, okay, where should I start?
Sure.
So my journey goes back to, I think, slightly more than 10 years. I think that's about 12 years over now. I started trading the financial market, or getting interested in the financial market, in 2010, where I was still a so-called intern at, back then it was Ministry of Community Development, Youth and Sports.
Sure.
That was in between uni, right? Then we have like a 3-4 months holiday. I was working over there. And every day, right, on my way to pantry or to the lift lobby, I walk by my colleague's desk. So I shall not name him, but his name has the same initial as mine, which is J also. So I walked by, I was like, what is this on his screen? It looks so interesting. And it was candlesticks. And I vividly remember it was charts that he was looking at. So I walked by the first day, the second day, the third day. And because I was an intern there, I don't dare to ask too many questions, right? Then finally one day I pluck up the courage and I say, hey bro, what is it that you're doing? Not so interesting. What is this? Then he was like, oh, I'm trading the markets. So what market are you trading? I was so excited, right? Like, this is something new to me. And what markets are you trading? How do you get started? Can you teach me? That was the $1 million question, right? Like, can you teach me, since you're a friend, right? He was like, no, I cannot. I can't teach you. I can do it for myself. But I'm able to share with you some resources that you can check it out so that you can get your journey started. So he pointed me to the all those websites that typically I think most people will go to as well. I started with babypips.com, the school of Pipsology. And although that was a Forex-centric website, but I think the core principle of trading is pretty much the same: candlestick patterns, chart patterns, and all this are pretty much how I started with. And I suppose after my conversation with many traders many years later, right, I realized that was how many people started as well. So I'm with that knowledge of candlesticks, chart patterns, and then after that technical indicators, and I thought that was it. I literally thought that was it, and I'm ready to go. So I just jumped into the market, literally just jump into the market and let's figure out. So I had that kind of mentality, just jump in and figure out later. So we started with the Singapore market, and firstly I asked him, what stock should I look at? So tips. And that was also through, later on I discovered that many of the traders whom I know started this way as well. They they get tips from whatever source that they can, and they bank on this, which this will be a talking point later. I think we're going to discuss this because this is going to be, some people might like what I think of it, some people may not, all right? So long story short, right, I jumped into the Singapore market and I happened to chance upon, you can call this beginner luck. I went into Genting Singapore, and back then it was like a darling stock of the Singapore stock market. And being a Singaporean, I was very comfortable jumping, going and trading in the Singapore market. So I vividly remember it was range bounded, $2, $2.25, $2, $2.25, $2, $2.25, and I did that for a couple of times. And every time my confidence grew, every time it just reinforced the thinking that, hey, this is easy. Like, wow, this really can be it. This is easy. So it just went on all the way 2010 to 2011, right? Then come 2011, how I ventured into the US market.
So 1 year you were just doing like range bound, $2, $2.25, buy, sell, buy, sell, buy. Yes. That's it. Okay.
And it was that easy.
Okay.
So I thought, the market is really so easy. See, candlestick pattern, support, resistance, oversold. I'm like, that's it.
Okay.
Then 2011.
Like to just go back, bro. So what kind of like capital do you start with? Like, were you working in a job already? Were you trading with your savings? Like, what was going on?
So I was the first position I went in, right, it was just with $2,000-$3,000.
Okay.
That was obviously with my savings, and I was in between my year 1 and year 2 of uni. So I had like 3-4 months of so-called internship, and so I was paid. Obviously not as well as today, but that time okay lah. I mean, can get by. So with whatever that I had, right, the first position I went in with minimal size because I'm still scared, Then the second position, hey, that's easy lah. First one can I reinvest everything, I pump it up again. Then the third one, the fourth one, and by the fourth position, I think my capital size that time, the position involved was already about 20,000. So somewhere close to 20,000. I was like, whoa, okay, this is picking up lah, and it was easy, it was smooth, right? Then go to 2011, how I ventured into the US market, coming out from that wasn't easy. Coming out from a so-called safe haven or comfort zone of Singapore market, because we are so used to trading stocks or the companies that we're seeing all around, StarHub, Singapore, Genting Singapore, Singtel, SGX, all these are, pretty much all these companies are very famous in Singapore, and we see them around. We use the services, so we are very comfortable trading them. But venturing into the US market is another dimension.
It's another beast, bro.
Yes, altogether, because besides the big names, like some of the banks we would have heard of it, Citibank, Citigroup, Bank of America, etc. There are a lot of other companies that I would not have heard of. Companies like, for example, the Boeing. Then we all know of Boeing, but I didn't know that there was that Lockheed Martin, there was General Dynamics and L3 and all the different defense companies.
Yes. Yep.
And that's where I got intrigued, and I was very attracted to it because in Singapore, when we think about finance, the financial sector, only 3 stocks. That's it.
DBS,
UOB, DBS, OCBC.
Yep.
But in the US, right, when we talk about the finance sector,
so many verticals.
wow, that totally wowed me because besides the super bank, you have the regional bank, then you have the insurers, you have, and there are like 100 over companies in that one sector.
Yeah. Actually, bro, our story, very, very similar. I started out Singapore stocks as well, actually.
Yep.
Realized there was a shithole, as in for me personally, right? So I went into the US.
Yep.
But what I thought was interesting was that, yes, there's a lot of names that we don't know, but actually, to be honest, there's a lot more names that I know in the US compared to Singapore, actually.
Yes.
Right? Like, as in, even though I'm a Singaporean, there was a lot more that I knew in the US, right? And I'm talking about, things that we wear every day, right? Like he's wearing Skechers, for example. He's wearing behind the camera, our Gavin behind is wearing Skechers slippers. That's a listed company, right?
Yes.
It's literally all around us, right? These cameras are listed companies, right?
Yes.
Like everything, right? The pants that I'm wearing, the shoes that I'm wearing, Nike is listed.
Yes.
Right? Literally everything on us are listed companies, and they're all listed in the US. So I was like, holy shit, man, dude, there's so much more. Right? Because you asked me, to be honest, you asked me like, what is, whatever, Oxley, for example. I don't really know,
Yes.
Bro. Right? So actually, I found out that I knew more about US than Singapore, and that was my epiphany, actually, interestingly, right? Of course, there's so much, right? But there were so many companies that we use every day that were actually listed in the US, which was quite fascinating to me.
Yes,
yep.
Indeed. Yeah, so to venture into that, right, how I got into this is because one of my longtime friends, he suddenly one day out of the random, right, he was like, hey, I'm going to attend this program. I was like, what? You attend program? What program are you going to attend? Oh, I'm going to learn about the US market and all that. I'm very convinced this should be the way. And being a long-time friend, and that time I was like, oh, you going? Really? You going? Okay, I will go also.
Yep.
So I went without checking out what even the program was. I just signed up on the spot together with him. And that really opened up a whole new world for me from that moment onwards. And that was in early 2011. So I head on over to the US market, really learn the in and out of the US market, or basically not just the market, but also on the relationship between economics as well as the market. Because a lot of people think that trading individual stocks, right? All they need to focus on is the individual stocks performance or the fundamentals. But after that, I come to realize that this whole financial market, right, is actually it's a game. It's a game, right, where if you understand the rules, it's how the money flows between one sector to another geographical sector, or it can be business sectors, and it's always the flow of money. And going through this whole process, right, going through the program, it taught me that, it gave me that understanding that I should be looking bigger, not just focusing on individual stock and then applying my technical analysis on it, applying my technical indicators on it. I think that is a very myopic viewpoint of trading. But instead, right, if I broaden the horizon, I come to realize that the businesses, the company stock price are driven by the expectation in the performance of the companies, and the performance of this company, the future performance of this company are derived or affected by what's going on in the projection of the economy.
Interesting. Bro, come, let's talk some stories, brother, right? You share one story, I share one story, okay?
Yes.
Tell me a story of a company that you, maybe in the entire history of investing that you saw, that gave you one of the best results that you ever seen, right? Let's go.
Disney.
Tell me the story, man.
Disney was...
What's the thesis and when was the time frame?
Disney was the company that gave me my first pot of gold.
Wow.
And I came across it in middle of 2011. And I focused on this concept called seasonality. And now of course, I brush it up and modify a little bit to something called cyclical analysis.
Yeah.
So I really like to study the cycles of how stock prices behave.
Sure.
Then I come to realize, right, in Disney, in the early days, right, when I first got into Disney, it was only 20 plus,
Sure.
$20.
Wow.
Then over a period of 7 months, which every year, the same period, it will be sometime late October, leading all the way to, I think, April, the following year. So it's a 7 months period, right? Disney would go up in this period. And I always question the why, which after that, then I realized, okay, the end of year, usually they have, they release some movies, Frozen being the most successful one along this year.
Avengers, brother.
Avengers, yes, as well.
Yes.
So they will always rally towards the year-end period, and this optimism will overflow to next year, and they will pick up somewhere in March and April.
First quarter,
yeah, the first quarter. So after understanding this, right, the first time I got in Disney was 20 plus. Then the following year I got out 40 plus, and then I repeated the cycle.
Wow.
I didn't think much about it. I thought, okay, this was the cycle. Over the last 20 years, it has an 80% chance of it behaving in this way. So hey, why not? I just follow through the same cycle. So the 40 plus went to 60 plus, 60 plus went to 80 plus, and then the 80 plus went to 100 plus.
Bro, this is something that I learned, if I'm not mistaken, from you, right? In one of the sessions that you did at night,
Yes.
right? Where you were sharing about barcharts.com and
Yes.
seasonality.
Yes.
Then I was, this is something that I learned. And I share this with my students actually, right, with regards to seasonality. So I use that very, very frequently for my stocks that I'm looking at, for the markets that I'm looking at, to actually see over again, right? It's not 100% conclusive, but it's probability, right? Like
Yes.
which months they do extremely well, which months these particular stocks don't do so well, for example, right?
Yeah.
So that was what you actually followed for Disney.
Yes.
Bro, by the way, interesting story, right? Like, dude, I'm very familiar with Disney, bro. Very,
Okay.
very familiar. Every week in my stock workshops, I always talk about Disney, right?
I see.
So I always talk about Disney, but recently it's no longer in my portfolio anymore.
Yep.
Because I think it lost a bit of its magic. I don't know.
Bob Iger is back, so
Yes.
hopefully I hope the magic will come back.
Yeah. Let's see. He left and then he came back and
Yes.
everything, right? But yeah, Disney, very interesting. So let me share one of my
Yeah, what
horror
about yours?
stories.
What about yours?
No, how about I share a horror one?
Okay,
right?
okay.
Talk about projection and what were my lessons from this one stock. GoPro.
Oh, okay.
That's not talking about cameras. Then I remember, GoPro. 2014.
Okay.
I think they were just getting listed. Right?
Yep.
And then, again, I always, I like stocks, and the reason why I love understanding businesses is because these are actual product services that we all use, right?
Yes.
So you can actually tell, right? Hey, wow, everybody is now wearing Skechers shoes, Nike, right? The trend is going up and whatever not. So I was like, hey, GoPro, wow, dude, I've been traveling and I see everybody wearing GoPro, carrying GoPro, while surfing and all that. Wow, do you all believe that travel is growing? Yes. Do you all believe that all this filming, everything is going? Yes. Wow, GoPro, right?
Yeah.
So this was one of my theses that I had based on a qualitative standpoint.
Okay.
Right? But dude,
what happened?
I was very wrong. Right? I was very wrong. And the reason why I was very wrong is because, bloody hell, like a month after whatever it is, suddenly Xiaomi got the same product for 1/4 the price, bro. Right? People are not so loyal to GoPro anymore, right?
Yep.
So even though they had all these beautiful videos and stuff like that, people could use the same function behind, like, this small camera you can attach or whatever it is. Bringing Xiaomi coming up with 1/4 of the price, for example, like, why would you want to go and buy something that is so expensive, which does the same shit as something that is 1/4 the price and whatever not? So the stocks IPO, I don't even know whether they're still listed anymore.
Yeah,
Right?
I think so.
Right, but it was a complete disaster, bro. Look at the charts. It just went up, then it just did a complete tank, and it just never, ever recovered ever again, right?
Yeah.
So I guess one of the things that I learned as well from this is technology, technology-wise, right? If you're investing in technology companies per se, you really have to be careful.
Yes,
right?
definitely.
Because sentiments can change. Technology evolves very, very quickly.
Yes.
Evolves very fast. What's hot can become not very quickly, right? So my later we'll talk about this, but my little bit of my investing philosophy in stocks is also evolve and transform a bit.
Yes.
Right? But yeah, man, GoPro was a shit show for me, right? Anyways, we win some, we learn some, right? So that was a very good learning lesson for me, right? Because yeah, man, it was so quick to change, right? Like today, I don't know, Gavin, do you have a GoPro?
Yes, I do, but I guess we just lost the sponsorship.
Sure. I don't even know, right? So my friend Gavin behind, he goes and does a lot of underwater, videos and all that. But I only see him using his phone. I don't see him using GoPro anymore. So again, right, you can use anything you want to, right? So what's the competitive advantage, right? Always, when you're looking at a company qualitatively, what's the competitive advantage the company has, business has? It wasn't really that much, I guess, right?
Yep.
So yeah, bro, that was one of my horror stories, right? Okay, so continue, bro. So how did it evolve, right? So Disney you're sharing about, and then what's happened?
Yeah, so Disney, after doing that for a couple of cycles, right, it gave me my first pot of gold, and it gave me the insight that, with a diverse market, because I tried to apply the same analyses, the same methodology to the Singapore market, I realized the effectiveness was limited, not as effective as how it would have been on the US market.
Yep.
So that's where, since that realization, right, my focus has always been on US market instead of Singapore market.
Same, bro.
In Singapore market, I just probably hold, REITs, dividend giving counter, and that's it. I literally just hold them and forget about them. And the focus has always been on the US. So, since you share about your horror story, right? So
Tell me yours, bro. Tell me
my
yours.
horror story came from the Singapore market.
Singapore market?
Yes.
Shit, bro. Lion gold. Tell me what's up.
So as I was learning the US market in 2011, so 2011 was a year of transformation. While I was making the transition over from Singapore to US market, so I was juggling both sides, right? In Singapore, I was just, still doing the gen thing, $2, $2.25, $2, $2.25. And then on the US market, I was like, wow, this is a whole new world, it's so exciting, right? So I went into that, 1 feet deep. And then on this side, came 2011, what was the biggest event that affected everyone? Eurozone crisis.
Yes.
There were talk of Greece getting kicked out of Eurozone.
Yes.
And here I am, right, in Singapore, thinking that Greece is like how many thousand miles away from Singapore?
Doesn't matter.
What is it going to do with us, right? It doesn't matter, right? How wrong was I? What happened during the fourth trade on Disney? Not Disney, on Genting Singapore, right? $2, $2.25, right? So I bought $2. It came down to 193. So that was sometime around August of 2011. So it came down to 192 or 193. So this is a support level. There was a support level. Okay, I buy in some more. Then after that, it come down 185. When it come down 180, support level. Buy in some more. So I stacked that position, a losing position. Although I didn't double down, but I stacked the position, heading into losses, and end up, right, I said, can one, can hold. So 180, right, you get in, and then it bounces up. You feel so happy. You're like, oh yeah, I made the right decision. I got it at a much better price. It's gonna go again.
Yep.
Then, as the whole Eurozone crisis developed, what was painful was I watched Disney in a slow fashion over a couple of weeks, right? Sorry, not Disney, Genting Singapore. Over a couple of weeks, $2, $190, $180, $160, and finally just went all the way down, right? Until the point where I truly learned the essence of these three words. Buay tahan.
Buay tahan.
Buay tahan means what? Like, oh, I cannot. I think I will hold through. It feels very depressing.
Yep.
Every time and especially that time I was still new, right? I didn't have that mental tenacity or I was like, I thought it was supposed to be easy, how come like that? I lost everything, So I cut loss at 148.
Wow.
So that was a painful lesson after stacking a few positions down. I cut loss at 148.
So at that point there wasn't a risk management, stop loss.
It was just like greed. Wow, I can make a lot of money and that's all. So that lesson became a foundation step in my philosophy or on trading today, because it doesn't matter how much we are going to make, it doesn't matter how much I'm going to make, but what matters to me right now is how much am I going to lose? Can I accept this loss first? If I can, then I will take this position. If not, forget it. I will just skip. No matter how good potentially it can be, I will just skip. So that actually prevents me from blowing up my account later on. Yeah, so now looking back, I had that one lesson to thank for. And at that point of time when I cut loss, it was a high 4-figure loss. As a student, it was painful.
Of course.
And I'm glad that it happened during that period, because imagine the same thing happened to my portfolio, 6 to 7 figures, and you half that. You'll be losing away what? Like
a lot, bro. $500,000.
One a house.
Yeah, exactly.
You'll be losing one.
Absolutely.
Yeah.
Right?
So
Ben learned these lessons early, right?
yes.
Yeah. The fluctuations, the swings in portfolio, when you go bigger size, is going to be very different.
Yes.
The emotional management is very different,
Yes,
right?
indeed.
When you're doing 6, 7 figures, for example, dude,
Yeah.
right? Crazy swings and everything, man.
Yes.
Crazy, absolutely amazing. But anyways, we live and we learn, right? We
Yes.
get better and better along the way, right? So
Definitely.
thanks for sharing that, bro. So in terms of, besides Disney and everything, right? So what are the strategies that you employ, right? So what really worked for you? Was it just by buying and selling the stock, or were you using CFDs? Were you using options? What is the strategy that you use primarily today?
So before we get to there, right, in the first couple of years, right, most people think that when they embark on trading, it will be an easy journey.
Sure.
It will be a snap of finger, and then they suddenly can transform from whatever they were doing to become like, hey, I'm a full-time trader, I'm profitable and all that.
Yeah.
So I believe in that.
Yeah.
I believed in that, and but my experience wasn't that. It was far from that. 2011, 2012, I was figuring my way out, right? Things didn't get stable until 2015. So what happened in that 2012 to 2014, which is, I think a lot of people, they don't see, because today when people, when they know us, they look at you, they look at me, they only see the us now. But they fail to realize that there's this period, right? And at that period, 2012 to 13, 14, that was a dark period for me financially, because when I finished uni, most of my friends went out to work. They just applied for a job, they went out to work. And I just refused to look for a job. Not because I am a lazy bum, I don't want to do anything, but because I believe that I've tasted a little bit of success in trading, and I think this can be it, This can be it, and I jumped into it. So literally, if I can give I jump off the table and I'm hoping that I jump off the building. Hopefully, if I'm midway my journey, now my wings can grow. But then I realized I'm falling much faster than I expected, and my wings are not growing. So that period was painful. That period was quite tough.
Sure.
Yeah. Then what worked, right, was gradually when things are not working out, it's frustrating. It's very frustrating, and it seems like you're going nowhere. And it's a little bit of depressing instead. To the extent that it's depressing. So what got me by was I went back to drawing board. Every day I was writing a ton of things. So I was logging down every single parameter of my trade. What did I do? What trade, what price, why, and then after I do an after action review. So that was the most rewarding time of my trading journey as well, because that was that period, right, where the introspect allowed me to figure out what I was doing, to seek out some habits, some good habits some not so good habits, and I literally wrote down everything.
Wow.
And that was a lot of hard work. And today when I share that with my students, right, they were like, "You sure you did that?" I'm like, yeah, that was exactly what I did. I still had all the paper, I binded together in a book. So
I think this is very, very important, bro. 3 bad habits that you had. Can you just share, like, and what should people avoid in terms of, these things that can disrupt their portfolio?
first thing, never scale in more on a losing position.
Never scale in more on a losing position.
That means if your original position is losing,
Yeah.
don't, if it goes against you,
Yeah.
don't scale in again, don't get in again, don't
get
double
in
down. I think that's worse. Because learning the lesson from Genting Singapore, right?
Okay.
I get in again and get in again and get in again, and finally, okay, this is too much. I can't take it. I have to cut loss.
Interesting.
So that was the first.
So you don't like ladder, right?
I ladder when I'm right. I ladder in when I'm right.
Okay.
I don't ladder in when I'm wrong.
Interesting.
If my initial position I'm wrong means that maybe I'm missing out something.
Yeah.
Maybe my original assumption is not working out. So I have to reevaluate the game. At least this
Interesting.
is how I do
Slightly
it.
different, but okay, cool.
Yeah. So
Okay.
this is what I do. And the second one I think would be to always trust or to always have a process instead of getting stocks, from random sources, tips, reports, expert opinions. Always have a process to derive the stocks. So today, right, the kind of stocks that I focus on are mostly unheard. Most people would focus on the Magnificent Seven, Facebook, Google, Nvidia,
Yes.
Microsoft. I will focus on stocks like Boeing, and then I'll be looking at Caterpillar, Deere & Co, and Costco, Target. All these companies are not so-called popular. They are great companies, strong price performance, steady price performance, price behavior, but they are not hogging the headlines. They are not in the news. And personally, I have a process to find this kind of stock, and I prefer to trade this kind of stock. Not that I have anything against the Magnificent Seven, but I find that the Magnificent Seven are highly, there's a lot of opinion on it, and as you know, opinion can be inflated. It can also deflate very, very fast.
Of course.
So the price performance tends to be a little bit more volatile for my liking. So I prefer to look at something else.
Interesting. But can I ask you, in terms of your portfolio for stocks, bro, how many percent do you use for trading per se, or do you invest or not really? Are you just primarily a trader?
Most of my funds are deployed for trading.
Okay.
But of course, I think as of late, I did a restructure. Half of it is actually in slightly longer term investment.
When you say longer term, what's the longer term, bro? Very important to clarify.
Every position, I wouldn't be very long, but the position is about 1 year plus.
1 year, okay.
So the vehicle of choice would be the ETF, SPY.
Okay.
So riding on the index ETF. So that is on one part. And then the others will be deployed to trading, and most of my trading positions are less than 3 weeks.
Okay.
Yeah, the duration is 3 weeks or lesser.
3 weeks or lesser. Okay, so that's very, very important to clarify. Fantastic, man. If you guys have enjoyed the episode so far, make sure you smash the like button. And guys, right now, after this, we're going to go into some live charts. We're going to look at some live market data. We're going to talk about stocks. We're going to talk about cryptocurrencies and exactly what prices and what stocks we're looking at to actually invest in right now. So if that interests you, let's watch on. Welcome back to the Modern Wealth Podcast. Right now, it's going to be very, very exciting. We're going to dissect the brains of Jay. We talked about some of the stocks he's looking at, some of the companies, some of the patterns, and all that stuff. We're going to go into it. We're going to go look into the market outlook. We're going to talk about some of the stocks he's trading, some of the stocks that I'm trading as well. But guys, a very, very important disclaimer. Right, before you do not take any of this as financial advice, please consult your broker, your advisor, somebody, right, if you want to proceed with anything, all right? So very, very important, whatever we're going to be sharing, it's our own personal opinions.
Yes.
Let's get right into it. So Jay, tell us, man, what kind of stocks you're looking at right now?
Currently, my focus is on I know the broad team is everyone is looking at AI stocks, right?
Yes.
For me, I'm looking at energy. And of course, uranium as well.
Uranium? Shit.
Yes, uranium.
What is uranium, bro? I don't even know, bro.
If you look at the ETF, right? The ETF caught my attention. The chart for uranium, right? Actually, URA.
URA?
Yeah,
Shit,
URA.
This sounds very familiar, bro.
Global X Uranium ETF.
Okay.
And if you look at the performance, you can see that throughout 2023, URA increased from like $20 all the way to where it is now, which is like $30, and the movement is like 50+%.
Wow.
And all this while it has been in the background doing its thing silently.
What are some of the companies in URA, bro? Do you know?
So that's where you can make use of the website. Usually I will go to ETF.com.
ETF.com, yes.
Yeah, ETF.com, and then I'll go and look for some stocks within the URA ETF itself.
Very interesting.
Yeah,
Okay,
so
cool.
these are the kind of stocks that are very strong.
Yep.
And if you look at healthcare is strong as well.
Wow, amazing performance, bro. Seriously, uranium is fantastic.
Amazing, right?
For healthcare, what do you look at? XLH or do you look
For healthcare, actually, you can start with XLV.
at XLV? Okay.
Then that's the ETF. Some of the stocks within healthcare, because I've just done the research yesterday, I'm looking at Eli and Lilly, LLY.
Yep.
You can see LLY is strong performance. Then you have the largest healthcare provider, which is United Health Group.
But even these ETFs, you are looking to trade them per se.
I will look at a broad perspective first. So I always want to derive my bias from the overall US market. Because if the overall US market is unlikely to perform well, then all the constituent stocks, right, are likely going to sink together with it.
Sure.
So I always look at the US market to derive the bias. And by US market, I meant S&P 500. So S&P 500, as we know right now, is just broke into all-time high territory.
yes, that's right.
And it seems to be fostering on without stopping.
Yep.
So the bias as in the short term is definitely bullish. And through this bullishness, right, then I will delve down to the sectors to see which are the sectors that are actually performing or showing some strength. Rather
SPY has really been on a tear, bro.
Yes.
Absolute tear, right? So what do you? So let's talk about, let's start with the broad markets and then we come down a little bit deeper. So we talked about URA, we talked about XLV, the healthcare sector, right? So SPY broken highs, right? Like,
Yes.
do you feel we are toppish? Do you feel we are bound for a correction? What's going to be happening, brother?
The start of the year, right, January, February tends to be the weakest link across the nice months of October all the way to October all the way to April.
Yep.
January, February tends to be the weakest link. So it is only right that, if we look at the performance from last quarter onwards, October, November has been quite bullish. And then December, for a large part of it was sideways,
Yes.
just staying up there. So in terms of the performance from the bottom of late October, I think the market rallied quite a fair bit already. And usually after such a rally, it is only normal that, when it comes to January, February, things would start to, simmer down a little bit, retrace a little bit. And that's where I think that's a stage that we are in right now, the transition that we are in currently.
Interesting. So we're looking to see a bit of a retracement, cooling off a bit.
Yes, I am looking at that because although the prices on the whole, right, they look bullish.
Yes.
No doubt. I mean, you go to all-time high, right?
Yes,
It
yes,
cannot be
yes.
more bullish than that.
Yeah.
But the internals are actually lagging.
Okay.
Internals meaning besides looking at just the price,
Yeah.
I also consider what are some of the other things that I'm looking at, which number one,
Yeah.
it is the comparison between the big caps
Yeah.
versus the small caps.
How do you do that?
So I will just pull up a chart of, let's say, SPY, right? And
Yep.
then I will put on RUT. RUT is like the Russell 2000.
Okay.
We can see that if we compare them side by side in December, while the overall market for S&P 500, for NASDAQ, for Dow Jones, they are staying quite high up there,
Yes.
and they are going sideways.
Yep.
But RUT is the first one to get thrown out the window.
Interesting.
So this means the smaller companies are the first one to get thrown under the bus. So what does this mean? In a very strong or very bullish market, right? Ideally, we want to see all the stocks rise together.
Yes.
Of course, the leaders will outshine the laggers.
Yep.
All right. But in this case, it's a clear divergence that my so-called leaders, the big companies, are still up there. Then the small companies are getting thrown under.
Yeah, bro.
So
There's
that's-
a huge difference, huh?
Exactly.
I'm looking at the comparison right now. Damn.
Yes. And that's one warning sign. I'm like scratching my head. Okay, shouldn't be right. If it's a truly bullish market that's going to sustain, then likely things are going to be
Bro, the
all going
performance
together.
is pretty insane. Correct me if I'm wrong. I'm looking at SPY in the last year,
Yep.
273% gain, but RUT being like a 13%.
Throughout 2023?
Yes. I'm on
Throughout
a 1 year.
2023, I think if we look at 1 year, S&P 500, let me measure it. Broadly,
Broadly, yes.
I think we are looking at S&P 500 is around 26%.
26%, yeah.
Yeah,
All the way up. Yeah.
somewhere around 26%.
27%
Then
is the price scale.
for RUT, we are looking at somewhere, that's December, that's about 18%. That's about 18%.
Yeah.
But in terms of the movement, right, you can see in terms of how the prices move, the big companies, S&P 500, NASDAQ, Dow Jones, they are more trendy. Whereas if you look at RUT, the Russell 2000, it is more of choppy, down,
very choppy, bro.
up, down, up. Yeah, and as of late, they are getting thrown under.
Yep.
So this is a growing divergence that I'm watching because, for example, yesterday's session on the S&P 500, it was actually a bullish session. So it closed higher. But what happened on the RUT, right, was that RUT opened higher and then it actually closed lower.
Yep.
So this divergence is a repeating common observation that I'm having now. And that led me to think the internals is not exactly that strong. So this is just one sign. Then what's the second sign? The second sign is I would also put on VIX. So VIX, I mean, as an option trader, you'll be very familiar with that. So when looking at VIX, right, currently I think as of now everything still seems to be in order. With VIX being a contrarian indicator, whenever the market rallies, then VIX obviously will tank, then vice versa. So any discrepancy on VIX, right, currently I still don't see any, but any discrepancy on VIX, that would also tally with that so-called warning sign that I see on RUT as well. So this is what I meant by the internals of the market rather than just looking at the price itself. So by doing this kind of comparison, we are actually able to derive more insights as to whether this market is likely going to continue or not likely to continue.
Okay.
Yeah.
Okay. Cool. Very, very interesting. Okay. A good divergence, possibly looking at a bit of a correction.
Yeah.
Right. Here, moving on forth. Okay. So what are some of the? Okay. So besides URA, for example, any like individual stocks you're looking at to trade, for example?
Individual stocks. If you look at Eli and Lilly, LLY.
LLY. Let's go.
This is a very strong trending stock that doesn't stop.
Yes.
As you can see.
Yes. Very strong American company.
Very strong. It started 2023 somewhere around 360, 65.
Yes.
It ended the year at 600, close to 600 plus. It hit a high of 621. So that's like a 70% movement.
Crazy, bro.
And all these companies, right, with a 70% movement, they are the market cap is like 500 plus billion.
Wow.
It's not small companies. It's
Huge
it's
companies,
big.
bro. Yeah.
They are
Massive.
mega companies, mega cap companies, and still giving this type of behavior.
Returns, yep.
And it doesn't hog the headlines. And that's what I like the most about it.
Interesting.
Yeah.
So again, looking for good, bigger cap companies.
Yes.
But they're not the ones that are always publicized out there.
Yes.
Interesting.
As opposed to Tesla, as opposed to obviously Nvidia was doing very well.
Yeah.
Meta was doing very well.
Absolutely.
Yeah.
You know, many years ago, actually, maybe not so much, right? No, many years ago, 2021, 2022, one of the stocks that I love trading was one of your recommendations, which was Target.
Yes.
Right. Now, the trend doesn't look as pretty.
Yes.
Not as pretty anymore, but it was once fantastic, bro. It was beautiful.
Yes, previously, especially 2020, 2021, it was like a super stock.
Super stock, bro. Dude,
Yes.
I still remember very clearly. Look at that trend, right?
Yes.
2020, 2021, literally all the way up. Now it's kind of like, I haven't seen this stock in a while, but kind of shit right now.
So if you look at Costco,
Yes.
if you look at Costco,
Are we doing well?
it will provide you with a different idea,
A different idea.
a different perspective.
Oh, holy crap. Damn,
exactly.
son.
Same sector,
Wow.
very different.
Wow.
So this is the super stock this year. Or at least last year.
Yeah.
So I'm looking at stocks like this, right? Where the overall market, like, what's going to happen to Tesla? What's going to happen to Nvidia? I'm like, they're going to do whatever they do, but I'm going to be looking at stocks like Costco, which, Costco? What is Costco? In this part of the world, it's not so
popular.
Not
right?
so popular.
Interesting. But how do you? So for somebody who's new out here watching, so how do you get to know these stocks which are under the radar? But
okay,
what's your process? Yeah, how do you do it?
The First thing, right, is to have a watch list.
Okay.
First thing is to have a watch list so that there will be a top-down watch list.
Sure.
So every week, right, I've cultivated a habit of looking at the S&P 500,
Okay.
which is the benchmark,
Yep.
versus the 11 other sectors.
Okay.
So from a top-down point of view, immediately at a snapshot of the market, I'm able to see what are the sectors that are already outperforming,
Okay.
what are the sectors that are lagging the market right now.
Okay.
So that already immediately, right, solves me a lot of problem
Yeah.
by knowing what are the sectors I would immediately just filter off.
Okay.
Because if I want to go in a long position,
Yeah.
I rather be longing into strength.
Yeah.
I want to buy strength.
Okay.
And if I want to short, right, or get out, then that's where if the sector shows me weakness, that's where the preferred action will not do. Will be not long lah.
I use Finviz to actually find it out, right? Like,
Yes.
Is that something you use as well?
I use stockcharts.com.
Or stock charts, okay.
Yes.
Stock charts. Because Finviz or stock charts, they both show you like the sectors, which sectors
Yes.
are performing well, which sectors are underperforming,
Yes.
right? Monthly performance and everything. And then you can see, right, 2023, which are the sectors that are doing really, really well.
Yes.
And it'll always give you a direction with regards to what's happening. So within those sectors, like the top few players,
Yes.
the bigger players is what you're looking
Yeah,
at.
the top 10, usually I will scan through the top 10.
Interesting.
And that's how Eli and Lilly, United Health Group, AbbVie, all these healthcare stocks, how
I love
they
it,
come
I love it.
about.
Guys, I'm getting so many tips, right? So again, if you understood, let me summarize and teach you the lessons, right? So again, Jay's process of filtering is, hey, let me not look at what everybody is looking at.
Yes.
Let me look at some things that are undiscovered. People don't really. They are strong companies, don't get me wrong, right? But
Yes.
stuff that people wouldn't necessarily look at.
Yes.
Right? They're not hawked by the news non-stop. So the companies he's looking at for trading, very simply, we filter down to actually see which are the sectors that are doing really well. Stockcharts.com,
Yes.
Finviz.com, you can actually use it. Filter out to actually see, hey, which ETFs are actually performing really, really well. Then we zoom in from the ETFs to actually find out which are the top players, right? The top,
Yes.
5, 10 of the players. We look at the charts and we go through that filtering process to see, hey, which are the ones that have good performance, right? So very, 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 very good example right now. He shared 2 of them, Eli Lilly, Costco, for example, which are
Yes.
really, really trading into very, very good strength.
Yes.
Right? Beautiful, beautiful. Shit, I'm learning too. Right? Very nice, very nice, very nice. Fantastic. Right? Okay, bro. So, a lot of our viewers,
Yes.
are crypto traders.
Yes.
Right? So, Jay is no stranger to crypto as well. His
Yep.
sizable portfolio in crypto, right? He also trades. He's very, very familiar. Right? So, I want to ask you for some insights with regards to crypto, brother. Right? Like, what's your viewpoint?
Shouldn't I be asking you for insights?
I want to ask you, bro. Like, then I'll give my insights as well. But yeah, you tell me, man. So, what are your insights with regards to crypto, right? Like, we're in this brand new year,
Yeah.
right? People are talking about many, many different powerful narratives, right?
Yes.
The most recent one was being the Bitcoin ETF being approved.
Yes.
We have halving happening very, very soon.
Yes.
Right? Like, we've been in the bear cycle. Are things gonna pop and fly again? All these different questions which I really, really have to actually ask you, man. So, what's your overall view before I go into some charts?
Okay, disclaimer first.
Sure.
I am not a native trader for crypto.
Sure.
Neither am I like those very active in crypto projects and all that. For me, it's still more of charts.
Yes.
It's still more of technical
That's
aspect of
the
trading.
beautiful thing about trading, right? Bro,
Yes.
you understand candlesticks? You understand, bro? I can look at Euro USD. I can look at Bitcoin.
Yes.
A candlestick is a candlestick, right? So,
Yes.
but tell me, man, what's your views?
I do think that the narrative generally, from my opinion, right, the narrative generally is pointing towards a bullish
Sentiment.
sentiment for crypto, and of course with the crypto, as in with the Bitcoin ETF being approved, then this allows what used to be an obscure asset class to tap into the realm of traditional finance, which is also good. And this good thing, right, is that for crypto, once it has access to this traditional finance market, right, then what happened is that it's likely going to be more stable, because I think we have been through a few boom and bust since 2017,
Sure.
2018, then it bust, then after that 2020 everything kicked up again. So things are likely to get more stable from now with the involvement of and flow from traditional finance. But one of the things I also realized is that from an overall perspective, right, how asset prices, asset classes prices behave in general has a lot to do with central bank policies as well. Because if the money supply is not increasing from the top,
Yes.
then all other asset classes are going to suffer.
Yes, for sure.
If the money supply is going to expand right at the top, which is what happened in 2020, 2021
Yeah, man.
because
Free
of
money,
COVID.
helicopter money.
Exactly. So what went up? Obviously, the first choices as a Singaporean,
Yes,
the
yes, yes.
first choice will be let's buy a house,
Yes.
let's buy a property.
Yes.
Then
Let's
once
buy
we-
watches. Amen.
Yes. So property will be first.
Yes.
Then securities
Yes.
will be second.
Yeah. Crypto.
And then crypto, that's alongside with it. Then also you have things like arts, fine
Bro,
wine.
risk assets went up massively, right? Your risk
Correct.
assets, right? Risk assets being
Watches.
your crypto, for example, your watches. Bro, that period of time was very, very good. It
Yes.
was fantastic, right? We all made great money from asset classes.
Yes.
So what's the outlook right now? What's the money supply looking like?
So currently, the money supply is not increasing. In
Yeah.
fact, they have been, from a global point of view, the Federal Reserve have been trying to tame down the money supply, and it has successfully done so from late 2022 all the way
Tightening,
to
huh?
2023.
Yeah.
So what used to be quantitative easing have
tightening.
turned into quantitative tightening. So there's zero quantitative easing right now.
Yep.
And this has led to a overall, pullback in the prices across the
Asset
more
classes.
supposedly more risky asset classes,
Sure.
which was why crypto, after the fall of the Luna, the fall of FTX,
Yeah.
it went through a period of just nobody's going to talk about it. It's
Yeah.
just going to be in the background. So all the funds are focused on more traditional asset classes, which are like securities, stock market, etc. But right now, we are at a very interesting juncture, which also falls into this bullish narrative because besides the halving, besides the ETF, what's going to happen this year, right, is that the Federal Reserve looks to reverse their interest rate decision. Right now, the interest rate is at 5.5, the overnight rates, right? So they are looking to cut at least 3 times this year, which the lower expectation should be somewhere around 4%. The median expectation is somewhere like 4.5% throughout this year. And when they do this, and currently it's at QE 0. So imagine they just increase, they just turn back on the QE, and especially, this is an election year as well. This actually bodes well for all asset classes. And if we are able to avert the recession, which is whatever supposedly recession is supposed to come, but Jerome Powell, the Federal Reserve Chairman, he seems to be very confident that we will be able to avoid it and go into a soft landing. And judging by the numbers on trading economics, it seems like we are heading that way. So it definitely plays in this bullish narrative. But of course, with every bullish narrative or bullish bias, then the trader in me will kick in. So what price will I look at?
Yes, tell me, man.
We can discuss that later.
Let's do that right now, bro. Let's go.
Nah.
Right? Okay.
So for crypto, right, let's say for overall, if I'm looking for
What are you looking at?
Bitcoin, for example.
Okay,
I mean,
BTC.
Bitcoin, the past week everyone is just looking at Bitcoin
Yes,
dropping.
absolutely.
And yesterday, ETH, I think dropped like what, 5-6%.
8% at most, man.
Yeah,
Absolutely.
quite a lot, right?
Quite a bit.
So people may be thinking, what price will be good to pick them up from?
Yeah.
Well, personally, I'm looking to at a level of around 36,000 first. And then if it can come to 32, hopefully not. If it can come to 32, I think that is a good price, at least for me, from my point of view, to pick them out. Again, not financial advice, it's just what I'm looking at, the
Okay.
price level that I'm looking at.
But how do you trade? How do you trade it, man? So you pick it up at 36, for example, right? Like what's going to be your TP strategy, right?
Okay.
Like when do you take profits? Are you going to trade it up? Like goes up to your resistance, you take your profits. Like are you holding it for the longer term? What's your personal take?
So when it comes to crypto,
Yeah.
I'm doing a very, I would say slightly opposite thing from what you do. You trade, which you can get in and out like
Yes.
pretty quick.
Yeah.
For me, I would like to identify good prices that I can buy, and I would like to hold them on for longer period of time. And my target, right, or rather my so-called my sign
Horizon,
to get out. I don't really have like a price target. Like maybe if let's say I would get in at 32 or 35, the obvious price target will be like 45, 48, which is the recent high now. And of course, in the last 3 years, the high is about 60 plus thousand. That will be
61,000, yes.
another level that we are gunning for. Should we want to, lessen our risk when it comes to those levels. But what I do, right, besides technical analysis, besides price, right, is this thing also called sentiment analysis. So when you see a lot of personalities online shit posting about crypto and like, wow, this is to the moon, everything, the narrative is. So that's where, and when there's an overwhelming majority or increasing number that is putting into this bullish narrative and thinking that it's going to moon, thinking that it's just going one way, that aspect, this sentiment aspect, right, also tells me that, okay, I think this is stoppish in the near term. And that's where I should be looking to.
Do you feel that right now or not really?
Before the ETF, the Bitcoin ETF, yes. So before that, everyone was like, look at this, you get a halving is coming, everything. So I'm like, okay, I think it's time for a short-term correction. It not necessarily going to a bear market, but at least the correction is coming, then it's time for me to lean up. Then I will go to the chart and say, okay, at what price level, then I should be looking to lean up.
Wow.
Yeah.
I want to say something.
Yes?
I want to say something, but I don't know whether I'll get caught on camera. But okay, cool. I think I know. Right? Yeah, absolutely. Sorry, I wanted to say that. Yeah. When everyone is happy, be fearful, lah.
Yes.
Right. When everyone is happy, everyone's thinking they're going to go to the moon. It's when you take off the. That's when you know.
Yes.
Very, very important sentiment analysis, right? So, but it's just based on feeling, lah. Is there any tool they use?
Based on, okay, tools, obviously the usual trend line. I do trend line projection. Support resistance, I find that in technical analysis, right, most of the commonly used tools are horizontal line, support, resistance, and then also another one will be trend line. For me, I prefer to use trend line. Not so much as to, people have varying degrees of trend line. They will connect two dots together and then this is one angle, that's another angle, and then they will end up having, 10 different lines.
Yes.
So for me, I like to find out like what is the best fit angle.
Okay.
Because if I zoom out on a bigger time frame and then I look at the best fit angle, like for example on the chart for Bitcoin right now, if you look at the bottom in November 2022. So for me, I'm referring to the futures because I can see the volume. But in this case, right, you can see that there is crypto, the Bitcoin futures. At the bottom of November 2022, it has actually rallied upwards. So if we use our eye to see it, we will be able to see a so-called like a trend angle that is developing. So using that, then I will be able to project like, okay, since this is the angle that everyone is looking at, then that moving forward, these angles should project certain levels that when the prices goes to there, they're going to have some form of reaction.
Interesting. Very, very nice, very nice. Okay, I get exactly what you're trying to say. Awesome. So again, besides Bitcoin, right, are there, like, what's your own play behind it, man? Are you looking at, what other narratives are you looking at? Ethereum ETF, for example, or any other altcoins, anything to share?
I'm okay, Solana was a very surprise run. I picked it up sometime last year where I was like, okay, what are some of the other L1s that I can get into? So a lot of them just went off the radar already after 2022. So Solana was like still there, and I was like, okay, I got some, I'm gonna rotate some into it. Who knew, right?
Then absolutely take off.
It just took off, and I was like, why didn't I buy more? As always, right?
It's always the case.
Yeah. So the L1s, I'm not so much looking at the altcoins for now, but namely looking to pick up for the longer period of time. At least my narrative or my perspective for crypto is to hold on for at least a couple of months because that's where it really ride for that trend.
To ride the waves, right?
Correct,
exactly,
to ride the wave.
We share the same sentiment, brother.
Yeah,
right?
That's good.
I love it. Fantastic. All right. So guys, I hope you guys got a lot from Jay. So bro, I have a couple of questions to ask you, right? So trading is something that everybody looks to do, they want to do, right? Like they want to get successful at it. You see a few really make it. You see a majority that don't, right?
Yeah.
What do you need to do to increase your probability to succeed as a trader?
That's a tough question, right?
Tell me, man.
I think it's important to not jump from a lot of traders that I know, right? It's what I term them to be grasshoppers.
Grasshoppers.
Because they will jump from one asset class or one instrument to another, to another, and to another, and another.
Sure.
So I was guilty of that.
Yep.
Initially during the dark years, right, 2012, 2014, I was doing a lot of trial and error. So I did stocks, then I tested out Forex, I tested out options, and I also did futures, different time frames for futures, intraday, etc. So for options itself, which I think you are very familiar with, you have buying of options, you have selling of options, different combinations of how you stack the options together to give you the Greeks exposure that you want. So what I was doing back then was like I was jumping. I was doing this one not giving me immediate result, I go to the next one. Not giving me immediate result, I go to the next one. But what really stuck through was stocks. So today, people ask me, "Gee, since other markets, other asset classes seems to give you a higher return, why are you not focusing on them as much?" Don't get me wrong, it's not that I dislike them. I love them. It's not that I totally shun them. I still do look at them. But I believe that if something is working for me for over a period of time already, then I shouldn't just change this whatever that is already working. So instead of just jumping, the temptation is always there. If let's say you make $10, the other guy make $20, you will be very tempted to, hey, how did that guy do it? How did that $20 come out? How come in the same period of time I'm only making half? So there was always this greed factor that I want to jump, right? But I think it takes more than just superficial carrying out of, it takes beyond just superficial strategies to make someone competent. Like you didn't get to who you were today just by going through the motion. Besides going through the motion, that was probably what you did or anybody did in the initial stage. But we delve deeper, we find the why. We also go and find out things like, the details of why something works, why something don't work, and we refine from there. And all of this takes time. And if someone were to jump from A to B, B to C, C to D, they wouldn't have this kind of depth in terms of the understanding and the mastery.
Absolutely.
Yeah, so
depth instead of breadth.
Yes.
Depth instead of breadth. Build
Master
deep.
of one.
Build deep.
Yes.
Build deep. Very, very good. There's so much wisdom in there, right? Build deep, right? The deeper you build, the stronger your foundations.
Yes, definitely.
Right? The deeper you build, the stronger your foundations. Very, very good. Very good. I love it. I love it. I think that's very, very sound advice, right? For the grasshoppers out there. Build deep, right? Dig deeper, right? So your foundations are stronger. I think that's very, very important. Thank you for sharing that, man. And I really believe that as well, right? Like, recently I saw this movie, right? Which really has been like, I've been dreaming about it every night, bro. I watched a movie called Dumb Money.
Okay.
Right, you know Dumb Money?
Yeah.
Right, so the story of GameStop, right?
Okay.
And this guy called Roaring Kitty.
Okay.
Right, and basically like how he built his entire thesis behind GME and why, that was a crazy stock in 2021.
Yeah,
right?
crazy.
Like, it was kind of crazy, but it was insane, bro. Like, when you actually study the insights of this guy, this Roaring Kitty guy, like he really built that depth, right?
Yeah.
Like he was so confident to say that nobody knows the stock better than I do. I've analyzed every angle, I've analyzed every possibility. The conviction was solid, bro.
Yes.
Right? The conviction was really, really there. It's like, how do you know this stock so well? Like, dude, I put in so much work into this one thing. I've built that depth, and that's the reason why I know. Yeah. Right? So, yeah, bro, really amazing story. The dude, turned like what? His $50,000 into a couple of, $30-40 million, something like that, bro.
Yes.
Right? Crazy story, right? But again, the story behind depth, right? How much are you building deep, right?
Yes.
And if your depth is not there, you are easily shaken, bro.
Yep.
Correct or not?
Definitely.
Because if your roots are not there, then walao, you one wind blow, hey, fly away. You
Paper hands.
Paper hands, bro. Right? Absolutely, right? So the roots need to be there so that you can stand strong. Amidst the storm and everything, right? So that's very, very important. Again, investing, trading is such an exciting journey. So many things to learn and discover. Right, Jay, I really appreciate you being here. Thank you so much for being here. Guys, if you've enjoyed this podcast, make sure you like it. I love JJ. How can people find out about you? Where can they look you up and stuff?
You can check out my website, swimtrading.com.
Okay.
Yeah, so everything else is there. How they can connect with me on social. All the links are there as well.
Fantastic. Swimtrading.com, guys. Check him out. Absolutely amazing guy. I'm very, very blessed to have him as a friend. And I hope you guys go and follow him on his journey too. Take care, guys. Till next time on the Modern Wealth Podcast. Bye, guys.
Bye.